So, Thurman, you have which? Okay, so that's you. That's you with the picture, Thurman.
Um,
Yep, that's you. I got you.
yeah. Hmm.
All right, there you go. So, I'm thrilled to introduce uh Mr. Brad Blazar. I hope did I pronounce your last name correct, Blazar?
You did.
All right. So who is Brad Blazar? Brad Blazar is a visionary in the realm of capital raising and leadership. Once at the helm of an oil company, Brad transitioned to mentoring companies and individuals, leveraging his profound insights into finance and investment. His journey, marked by successful raising of over $2 billion, has made him a beacon for those looking to excel in the financial sector. So his books and talks inspire many, making him a value figure in our community. So please join me, everyone, in welcoming Mr. Brad Blazar.
Great. Thank you so much for the introduction, Daryl. It's great to be here spending time with all of you today. Real humbled and just real blessed given the community that we built around the world. But here today, really just to answer questions and add as much value as I can. I know we're all in the capital raising space at different levels, but exciting to be here with all of you.
Fantastic, fantastic. And that's the reason why I asked you to come. Like I told you when I was communicating with you on Facebook, we have the capital raise strategy session, and the purpose is to educate others to capital raising, what it takes, to raise 2 billion. That's a lot. So
Yep.
I'm gonna start out with the first question. Then I'm gonna turn it over to Jim. But my question is, you over your span, you have raised $2 billion.
Mhm.
Going back to when you first had to start raising capital, can you tell us what was it like and what were some of the things that you had to overcome to get to where you are today with raising 2 billion?
Yeah, absolutely. I started raising money, believe it or not, at the age of 21. I was going to school, studying to be an architect, and responded to an ad
Hello.
in the local paper. And so when I responded to an ad, I was hired by a very small oil company in Austin. And they shared with me, a framework, a system, a structure that allowed me to get on the phone and build relationships with individuals and working between class after school, 12 to 15 hours a week. I very quickly aspired to a six-figure income and realized, man, I really am good at sales, but I'm also good at building relationships. And so I realized that if I was making that kind of money, which was considerably more than I would have made with a degree as an architect, I took some money that I had scrimped together and at the age of 23, basically turned my back to completing my education and I launched an oil company. And so I was the founder and CEO of an oil company that I had built over the course of about a decade. We built it up with about 35 employees and projects in Texas, Oklahoma, Louisiana. And like most everybody that I would assume on this call, and like most people that are raising money, we were slugging it out. I mean, it was hard work, code calling, follow up, picking up checks for 50, 80, $100,000 and aggregating all of that capital together so that we could hit our target raise. And there was a defining moment in my career in the oil business that changed my life. Like it was a major aha moment, a revelation. And it's one of the big concepts that I share and speak about called marketing to the one to get to the masses. Now, let me break down what I mean by that. When I was in the oil business, a good friend of mine approached me, and he was a RIA working in Austin, Texas. And he said, I've been watching you kind of from the sidelines. Like, I know what you do, but I really don't know what you do. And so we met over the course of a number of weeks, showed him our track record, showed him what we were doing. And he finally said, I think your fund would be very suitable for some of the clients whose money I manage. And I said, great. He said, why don't we co-host an event and you come in, you present what you do. And then he said, I'll do all the follow-up work on the back end. Like I'll meet with each family. I'll figure out how much we should allocate. And I said, great. And so he organized about maybe 18 to 20 of his clients. I came in. We did a very nice event at an upscale restaurant where we just had some wine and served some hors d'oeuvres. And in the following about 2 to 2.5 weeks, he sent me $2.5 million. And I just sat there and I had kind of like this aha moment. And I'm like, holy cow, like I just landed a whale. I've been fishing for bluegills. And what I realized is if I could find 5 or 6 more guys like him, Daryl, and the rest of you, I could literally 5 to 10x my capital raising that year. And so what I did is I pulled my sales team aside and I said, okay, we want to continue doing what we're doing, but I also want you to start focusing an hour or 2 of each day, reaching out to these very small boutique RIAs. And if we can get them to know, like, and trust us, just like my friend, and maybe drop his name or the name of his firm to build some credibility, we can dramatically increase our capital raise this year. And so that's what we did. And so over my career, as I've been hired by major companies to come in as the head of capital markets or as the national sales director, we have always supplemented raising capital from high net worth retail investors, taking this other approach, building relationships with RIAs, family offices, and then eventually broker dealers, because they control the wealth of the clients that you're trying to get in front of. And by marketing to that one office or that one RIA, he can potentially introduce you to hundreds of his clients where he manages hundreds of millions of dollars. And so that's how I was able to scale fairly quickly. And over the course of my capital raising, raised north of $2 billion.
Wow. Wow. Now, I'm new, I'm not new, but one of the terms, one of the abbreviations that you threw out, I'm just not familiar with. Mm-hmm. And you said RIA. Mm-hmm. What does that mean?
An RIA is a registered investment advisor.
Gotcha.
They're people that work in the financial services industry, but they're very different from a stockbroker. They're very different from a registered rep. And they are very different from the types of people that work for broker dealers. You see, in the financial services industry, everybody, there's a difference between a broker dealer that typically is more transaction-based, where they get paid commissions. They're regulated by FINRA, which is one of the regulatory oversight bodies that supervises the industry. And then you have these little RIAs. The RIA is an independent. He works for himself, or he might have his own firm with 2 or 3 other RIAs. And they're fee-based advisors, meaning they don't charge commissions. The way they're compensated is they usually get what we call an asset management fee that is a percentage of the client assets that they effectively manage. Usually it's between about 1 to 1.5%. So if you're going in to interview an RIA, what they might say is, Alicia, we charge a 1% advisory fee on the funds you place with us. We don't get paid commissions. And therefore, we have an alignment of interest as a fiduciary, because as your investments grow, the fee that's associated with that grows as well. And so they're largely unbiased, what we call RIAs. But that's the type of person that you're seeking, because they love alternative investments. They love to diversify a client's portfolio. And they basically will do business with us based on a gut feel after they've invested the time to know us and make sure that we have the things in place that are important to them like an understanding of the securities regulations, investor relations, reporting, accounting oversight. But once you get through that, a lot of times these people will open up their network and allow you to come in and co-host events and then allocate a percentage of each client's portfolio to you. And that's where your growth, that's where your scale really takes off.
So that 1%, that's paid on the back end, like once everything closes, or is that paid on the front end?
It's paid usually on a quarterly basis. So as an example, if you put $1 million with an RIA, they would manage that money, they would invest it, and then every quarter they're taking basically, let's just say 0.25 or 25 basis points. So it's paid on a quarterly basis. Usually it's how they get paid over the course of the year, but it's what we call a fee-based account or an asset management fee. Very different. They don't get paid commissions.
Okay. All right. Jim, you have any questions? Alicia? You're on mute, Jim.
Thanks, Daryl. So really, we're still a small enough group that we want to treat this like a mastermind, and not have necessarily one of us dominate all the questions that you guys really are just dying to know. So Brad's got a ton of experience, and travels in circles that most of us do not, and puts into practice a lot of the things that we talk about all the time. But I think he has been a lot more successful at it. And as you can tell, I don't want to guess at Brad's age if he didn't want anyone to know, but he said he's been doing this since he was a very young man. So as you can tell, this is a journey. It's not, it's not something he's trying to do overnight. It's not something he's trying to make happen in 30 days, 60 days, 90 days. And I think the first time I think I met you, Brad, was actually at an event in Chicago that I'm trying to remember it was a charity event, the Royal Meet and Greet at the Bentley dealership.
Yeah.
And so
James Bentley.
Yeah. And so that room, guys, is a room full of people that there's no one in there that could not afford to invest 100,000 or much more in your deals. And those are the kind of places, that he's hanging out. It's not just conferences, and it's not just social media. Brad puts in the hard work to make these things happen. But I would love for you guys just to either raise your hand or post a question in the chat that you'd like to know. And I see Edwin has his hand raised, so we'll let Edwin go first.
Hey, Brad. Nice to meet you. Thanks for coming on the podcast today, or the meeting. I have actually thought about reaching out to RIAs. I've attempted to in the past, and so I have two questions for you. Number one, is there an easy way to identify whether it's the type of license they hold, or maybe it's just the name of the shop, whether the RIA is truly an independent RIA, or if they are captive to a broker dealer, such as many RIAs that I've come across and tried to contact in the past, they end up having their platform where they're trading on with Charles Schwab or some other type of broker dealer platform. And ultimately, the RIA is actually captive too. They can't do anything outside of that platform because that's where they hold their license or hang their license. So first question, is there an easy way to identify if a RIA is truly independent? Second, I noticed that, I'm sure people are like, oh, wow, I could start reaching out to RIAs. But the key to your initial RIA, like doing that meet and greet, and I think that's a fantastic idea, a nice dinner, front a couple thousand, but the end payout can be huge. However, you had an existing relationship with that RIA. So how would you propose if somebody were to start building, and I'm very relational and local focused. So if I'm going to build a relationship, it's going to be right here in Tampa Bay, where I'm based out of. So how would you recommend somebody start reaching out, and I'm assuming it's not a pitch like, hey, here's a one pager. This is all about me. This is what I do. Let's partner together. That's just a huge turnoff. I know that it would be for me. So how would you recommend somebody, once they identify the RA, then how would you recommend that relationship be established and then built out so that in the future, there would be that opportunity?
Two great questions. I'll answer the first one. You are correct. Many people that work in the financial services industry maintain what we call securities registrations. And many broker dealers will have, in addition to the transaction side of the business, where people traditionally have what we call a Series 7 license, where we can sell things like stocks, bonds, mutual funds, insurance products. Many of them will also have an advisory side to their business, like Edwin was basically outlining, where that financial professional takes another type of a securities license that allows him also to do fee-based business. So many broker dealers will have an RIA. Those are not the type of people that you want to approach, because the broker dealer has to approve anything that the registered rep does, and they have to give consent. If they don't do that, it is a serious securities violation that we call selling away, meaning that the rep is marketing or selling a product where the broker dealer has absolutely no knowledge. So those are not the types of advisors or RIAs you're seeking. What you're looking for are RIAs that are standalone, true RIAs that are either registered to the state that they're based in. And then once an RIA grows its asset base to 100 million or an amount greater, they move the registration to the SEC. The easiest way to check this, Edwin, and others, is by going to the FINRA website. It's FINRA, FINRA.org. And on FINRA's website, you'll see a little drop down at the very top called broker check. And you can put in the name of anybody in this broker check that you meet that is a prospect, and very quickly it will tell you if they have a broker dealer affiliation or not. If you do not see that they are affiliated with a broker dealer, that would imply that they are a true RIA and therefore a really, really good target for you to be reaching out to. So that is the easiest way to check whether somebody is a pure, true RIA or whether they have an affiliation with a broker dealer. It's to check their background on FINRA's website. The second question, as it relates to basically, working with RIAs and doing those types of things, is one of the things that I talk about as we coach and mentor people is this concept called the 4-step blueprint. One of the things that has allowed me to literally teach thousands of people how to be successful capital raisers is I've taken a lot of knowledge and I've codified it and I've created systems and structures around it. So you'll often hear me talking about things like the 4-step blueprint, the trust sequence, the validation phrase, or this concept marketing to the one to get to the masses. Because once people grasp and understand the concept, they can run with it. When you're reaching out to RIAs, you do not want to pitch them. You want to inquire, do you as a firm deal in alternative investment products? Because that's what most of us here are selling. We're not selling stocks or bonds. We're in things like real estate, business acquisitions, those types of things. And so the first question is, do you invest in things like alternative investment products? If they say yes, then you can say, great, we're a local company that does this. Right now, I don't have any investment opportunities that I can openly discuss with you. But what I would like to do is just build a relationship with you over time. Would you be receptive to a meeting in the next week or two? And then if they say, sure, you go in, you sit down in their conference room, you get to know them, they get to know you a little bit. And I still would not pitch at this point. I would give them some very preliminary information. And then I would follow up, and then I'd follow up again. Because the biggest mistake most people make in raising capital. This is a golden nugget for everybody here. The biggest number one mistake that most people make is they pitch the investor or the group too prematurely in the process. You got a deal and you get in front of somebody or an office, you know, they got lots of money, and you start pitching. What happens next is that person that is a potential investor will say something like, Stephanie, sounds like it's a worthwhile opportunity to take a look at. Do you have some materials that you can send to me so I can, do my homework? And so you send them everything, your pitch deck, your memorandum, everything you got goes out the door or via email. And then you follow up, and they give you every excuse not to move forward and invest. Really, this could be the best investment you have ever done, and they're still not going to invest. But here's what's going on. Subconsciously, without saying it, what they're really implying is, Daryl, I don't trust you enough because you didn't invest enough time on the front end of this relationship with me for me to really get to know you better. Think of raising capital, everybody, like dating. And one of the things I talk about is this thing called the trust sequence, 6 steps in how you build trust with another person. And if you don't follow this outline and marry that with the 4-step blueprint, you'll get lucky every now and then, but you're not going to raise serious amounts of capital like most of the people we've worked with that understand these concepts. Think of it like dating. You want to get to know the person. You want to ask them a lot of questions. You want them to be able to ask you questions. And what psychologists have proven is that by asking questions and getting people to open up and talk to us, as we listen, we build trust and we get people to like us. And after doing this for many years and literally coaching thousands of people, one thing I will tell all of you, which is a fact, is people invest with people they know, like, and trust. I will tell you this, 95% of the people you talk to will never read the entire offering memorandum. They'll glance through it a little bit, but do you think they pick up that entire document and read each and every word? No. They're investing emotionally based on the relationship, the opportunity, and how good you are in building that trust with them over time. That's how I would approach that one.
That's fantastic. You spoke of
Brad. I do have a real quick comment though. So I dated my wife in Colombia, and within the first week, I just hit her over the head and drug her back to the States. Are you saying that won't work with this? I'm joking.
Yeah. No, I get it.
So Brad, I know you mentioned about the 6 steps and everything, but can you tell us one of those 6 steps?
Yeah, absolutely. The first one is very important, and so is number 4. So the very first step on the trust sequence is perception. Perception is everything, right? And when I speak on stages in front of a huge audience, I kind of joke and I say, you ladies are going to get this one much better than the guys, because when that date pulled up in a Yugo and you were expecting him to pull up in a BMW, you may have decided there was never going to be a second date. Perception is everything. But when somebody that is an investor meets you in the first 30 to 60 seconds, they're sizing you up. They're looking at the way you dress. If you're giving them a pitch deck, they're looking at the presentation. Is it in black and white with the staple in the corner? Or have you spent a little bit of money to have it done in nice color slides with a nice laminate cover and a spiral binder? What does your business card say about you and your brand? Is it a box of 250 from Vistaprint that you pay $29.95 for, or is it a nice embossed card that's a little bit thicker, more substantial? So the very first thing is perception. And once you get past perception, you're now on, quote, the second date. And so now you move through the process. The second step is what we call temptation. By asking good questions, you will uncover what will motivate that person to move forward and actually invest with you. You might ask them, Thurman, are you investing the money we're talking about to do something special with, like maybe put your kids to school, or perhaps invest in a second property as a vacation home? And they'll give you the answer. And so if they say, yeah, I'd like my money to grow over the next 4 to 6 years because I'm going to be putting my kids through school, when you're closing him on the 4th or 5th meeting, you can bring that up once again and say, Thurman, can you see how this opportunity, as it grows over time, will help you put your children through school? That's something I recall that was important to you from our first meeting. When he says yes, that is what we call a soft commitment. You're getting closure on him moving forward. So the best salespeople, as we all know, we've all been told, we ask a lot of questions, but we listen. The most important is step number 4, and we call this validation. It is a phrase that, if asked properly, will validate that the person trusts you so that you can move forward in the process, but it also sets you up for success. I always tell the people we mentor, in the first and second call, disarm the prospect, tell them you have absolutely no investment opportunity to discuss with them, even if you do. And then at the end of your second conversation, use a phrase or something similar to this. Robin, like I've told you, right now, I just don't have an investment I can share with you. I wish I did. But the reason is I like to give my existing investor base and people that we're currently working with the right of first refusal on our current projects and ensuing programs. But here's what I like to do. I keep a name of people on my desk, Robin, that have expressed interest. And I'd love to add you to that list and give you a call at some point in the future in the event I have an opening on something I'm working on that I think you could get real excited about. Would that be good? When Robin says yes, I thank her, but now you see what she's done? She's invited me to pitch her. Like she's asked me to call her back with the deal. So subconsciously, she's validated she trusts me enough for me to present her with an investment opportunity. Number 2 is she's actually invited me to pitch her a deal. And so I go into my CRM and I make some little notes. And on my calendar, I put a little reminder, 7, 8, 9 days later, I call her back. And after a few minutes of buttering up the conversation and asking her how she's been, I just say, remember the last time we chatted, Robin, you asked me to give you a call in the event I was working on something that I thought you'd get real excited about. Just so happens I do. I don't have a lot left, just a couple $100,000 before we close this out. I say that to create the urgency, but I say, if you've got about 10 minutes, I'd love to just give you some of the highlights and see if this is something you'd like to take a look at. And then I just go down 3 to 5 of the bullet points, tell her a little bit about the deal, send her the information, and then typically on that 4th or that 5th call or meetup is when I'm closing and getting the commitment from them as to the amount of capital they want to deploy and invest with us.
Fantastic. Anyone have questions? You got listen, Brad.
I have a
here.
question, Brad.
Yep.
Thank you.
Brad, pleasure to meet you. I'm Esteban. I really appreciate you taking the time, and I love the fact that your philosophy is based off of relationship building, and that's definitely the thing I appreciate, because it makes everyone slow down and really appreciate what is important. And so the question is, it is relationship building, but like you said, these are the epicenters of wealth, especially when you want to scale. So everyone is after these people. How do I differentiate myself whenever I put my foot in the door, whenever I have these meetings with these RIAs? Is it credibility? Is it just personability? What should I go about doing?
So it's a great question. I think what everybody needs to understand is, number one, you are a brand. Like, you are a brand. Your company should become a brand. For me, it's Capital School. That little vault is known all over the world. That is my brand. People see me, they're like, oh, that's Capital School, dude. But the way that you differentiate yourself is step back for a moment and really try to ask yourself, what makes me different than other people? Like, do I have a secret sauce? Or does my company do something a little differently, perhaps, than others? And if the answer to that is yes, then articulate that. For example, I also have another business where we raise capital. We largely invest in multifamily. And so when I talk to a potential investor, the thing that sets me apart from other multifamily operators is I'm able to tell that investor, Thurman, we invest based on a philosophy that's taken many years to perfect. We call it our 5D framework. I can look at any investment opportunity, and within 3 to 5 minutes, I can determine whether I want to invest my time and go deeper on that and potentially make an offer. Many others may spend hours. They may call the broker and look through financials. I can make that decision in 3 to 5 minutes based on 5 things. The first is what I call demographic affluence. I take the asset's location, I draw a circle with a 3-mile radius, and within that circle, I like to see the average household income above $100,000. And if it's below that, that tells me that people that live in that demographic area may have challenges paying rent. Second D is what I call density of population. Again, 3-mile radius, I want to look for 100,000 households or any amount greater than that. Barriers to entry. It also tells me that I'm in a heavily populated area. The third D is demand generators. Is the property located adjacent to something that's going to create demand, like a hospital system, a university, major employer? So by articulating these things, Esteban, I'm setting myself apart from every other multifamily syndicator that they may have spoken to. And the person can understand the way we underwrite our properties very quickly. And that's what I would call a secret sauce. It's kind of what makes you uniquely different from perhaps others that you might be competing with. The second, which is also very important, this is a big one, so write this one down. When I had Kevin Harrington from Shark Tank speak at my event a few years ago, he told everybody that we had assembled at the event that the big reason people get deals on Shark Tank or they do not, it comes down to one word. The word is execution. If you're talking to a potential investor and there's any doubt in that person's mind that you can execute on the investment objective that you're trying to carry out, fat chance in hell you're going to get any capital raised. So if you're a solopreneur and you're doing everything in your business and in your pitch deck, you don't have the images or the short bios of other professionals to reflect the team, it's going to be real challenging. Because when you have a team in your presentation and you can articulate handling all of our accounting is going to be Steve Smith. You know, Steve is a partner at XYZ, which is a local accounting firm. So they're going to keep the books. And at the end of the year, they're going to send out your K1 to make sure that we remain compliant. We have Thurman Cohen. Thurman is a partner at XYZ, and he's going to handle our compliance and securities. And then at the property level, we've retained the services of XYZ. See, now your story is much more believable to a potential investor. It's you and the team that may have 100+ years of combined experience, Esteban. And so execution, building the team, and then figuring out what sets you apart. Does that help answer your question a little bit?
That helps great. I appreciate it. Yeah, definitely. I like the aspect of telling the story about it and emphasizing collaboration with the team. So
Yep.
Thank you, Brad.
Absolutely. You bet. Yep. Sonia, I see that you have a comment or a thought.
I think Stephanie was next, though.
Oh, okay.
Thank you. Thank you so much, Brad, for sharing with us. But you gave us 3 things for the trust sequence, and I wanted to know if you could share the other 3. You said it was 6.
Yep. So the first is perception.
Mhm.
Then the second is temptation, asking a lot of good questions. Number 3 on the list is actually what we call connection. You're going to start feeling that there's a connection developing with you and the other person. You might see that they start following you on LinkedIn, on Instagram, Facebook. They might start commenting on your post. So you're going to sense that there is a connection that's developing, just like, you know, building a relationship or building a friendship. Like we said, number 4 was the validation phrase. Number 5 is attachment. This is now the point where they invest with you. So now you're married, you're attached, they've invested. And then the last is what we call affiliation. You go full circle. And so after somebody invests with you, after a month or two, once you've built trust even more and you've proven your abilities by doing the things you told them you were going to do, you go back and you ask them for referrals. And hopefully they will now open up their network as an affiliate. They shouldn't have any reason not to, and introduce you to people that they're connected with. And as most of us would assume, wealthy people hang out with other wealthy people. But the key is asking for referrals using verbiage and tonality that opens their mind to actually making introductions. So many people, when they ask for a referral, go about the process the wrong way because they're asking the other person a question that can very simply be answered with a yes or a no. So a lot of times people say, do you know anybody that might also want to invest? No, I can't think of anybody right now. And so you're pretty much shut down. But if you change your vocabulary a little bit and you say, Stephanie, who are you connected with that I should also be speaking to? You see the difference?
Mm-hmm.
You see, her mind opens up and now she's thinking, well, I go to the beauty salon every week with my friend, or, Edwin says, well, I've got a golfing buddy that I meet up with every Wednesday. So the verbiage in trying to open the door to getting referrals is, who are you connected with that I might also be speaking to? And then if they give you a name, you follow that up by asking the next logical question, would you mind making a polite introduction to them via email, text message? Usually the person will say, oh, no, not at all. Before you know it, you're now talking to their network. And that's obviously, again, where capital raising accelerates. It gets easier because now there's what we call an implied transference of trust. If Esteban tells Daniel that Brad Blazar is a good guy to invest in, the chances of Daniel moving forward in investing based on Esteban's referral is much greater than if I were to approach Daniel just cold or without any pre-existing relationship. Does it make sense?
Yes, thank you.
Yep. Good question.
Sonia.
Yeah, I think he sort of answered mine too, in terms of, like you said, the way you question things. You mentioned earlier, why am I disappeared? My screen, I show. Okay, here I am. Okay. You mentioned earlier, okay, I have a technology problem. You mentioned earlier to make sure you tell your investors, hey, I'm kind of tight here, but I may be able to get you in at another 100,000. I may have a spot for you. But I think when you said the verbiage or the way you position that is, I see a lot of things come across, when it's more like, as a former salesperson, hey, I'm at 95%, get in right now, all the bells and whistles and whatever. And that's a turnoff when people are like, because then next week they still got 95%. Hey, I'm going to put you on my waiting list. And there's no list. I mean, there's got to be a way to say that, but not be a pushy salesperson. It's got to be a soft pedal when you do that, because that turns me off so much when it's like, you're going to be on a waiting list if you don't book now.
Well, you got to understand a couple things. Number one is raising capital from investors is selling. We're all salespeople. We all have to become really good at closing.
Right.
In the sales world, I call people that are not good closers flirters. You're real good at sales flirting, but you're not good at closing. Your job in raising capital is to help this other person make a decision, bring closure to the process. And the word decide actually means to kill off. That's why it's the root of words like pesticides and insecticides. Like if you look up the word decide, it literally means to kill off. And what you're doing by helping somebody make a decision is you're killing off their indecision. Does that logically make sense? You're killing off that indecision of either doing something or not doing something. Investors do not want to invest with people that come across as overly desperate
Absolutely.
or overly persistent. But if you understand sales psychology, one of the most powerful closes in all of sales is what we call the takeaway. People want what they perceive they can't get. And so when you build scarcity and you tell people that right now, I just don't have anything that I can discuss with you, even though you know you do, you're building the scarcity mindset, but you're also telling them that your money is really not that important to me. You're not coming across as a salesy, pushy person. You're just taking a laid back, very, very, casual approach. Like, this is what I do every day. Like, we got a great investment over here, Steve. If you want to invest with us, great. We'd love to have you as a partner. If not, that's totally fine. I realize we're not for everybody. When that's the attitude that you portray, you're going to attract a ton of money, because that other person perceives you as somebody that wants to do business, but does not need to do business. There's a difference, and so if you can portray that mindset and be convicted in what you're doing and the projects you're getting involved with, you can be very successful as a capital raiser. But the second you come across as desperate or overly persistent, the person's going to shy away. So the way that you build that scarcity, and more importantly also, Sonia, the way that you create that urgency is by using those types of statements in your presentation to that other person, so that they feel there might not be a chance that I get to invest with Sonia. Like, she's doing business with all these other people that she talked about. Like, she must be successful. She must have others that are investing with her. And so when you finally do call that person, they feel somewhat lucky, like special. Like, I'm just going down my list. You've expressed interest in what it is I'm doing here. And so by taking that approach and following this framework, you will significantly close more people. And what's really interesting, I don't know how many of you here have studied the straight line method that Jordan Belfort talks about as one of the top sales closers. But Jordan has a sales track or a training system called the straight line method. His straight line method is almost identical to my 4-step blueprint, very similar. And so he and I have compared notes, and I'm really looking forward to sharing the stage with him later this year in May, when he'll be at the same event that I'm at. But if you study the processes, the structure of the presentation, very, very similar. It's a framework, and realize that it's based on human psychology, the way the brain processes information, building scarcity, the tonality and the phraseology. That's what's going to make you a really, really great capital raiser.
Absolutely. And I agree. Do not sound desperate.
Yep, correct. Correct.
Thank you.
Yep. Alicia?
So Brad, what are some of the ways you're tracking all of this information? And I'm going to preface that with, I like your responses. Many times when we go out to capital raise, it's not as polished and professional. All of your responses have been more high net worth, individual, business minded and focused responses when you're communicating with what sounds like accredited investors, institutional investors. And so I really like that. So I'm going to make that comment. What are some of the ways that you're using to track the information of who you've spoken with and how you're keeping up with what they're doing or what their investment criteria is?
Great question. So I find that it's really difficult to raise capital at any level using Post-it notes or Excel spreadsheets. And so I always recommend you should have a CRM system. And so, after each meeting, after each interaction, you want to go in and put your notes while they're fresh in your mind in a CRM system. There's many different products out there. There's Act, there's Goldmine, there's Salesforce, there's Pipedrive, all these different tools. And then you should also have a shared calendar app like a Calendly or a OneSub so that you can send somebody a link. that they can click on to perhaps schedule a meeting with you or some type of an event. But I, at a minimum, recommend a good CRM system. Now, what we're putting together at Capital School, and this will actually be released in February, is an all-in-one capital raising solution. We're going to call it Capital Stack. And within Capital Stack, you'll have a CRM, you'll have a calendar, you'll have the ability to email all of your leads. It'll include SMS text messaging. You can text people. It will also allow you to create a funnel. And so you can create a funnel to initiate your lead generation. As those leads come in, they go into Capital Stack. Now you can send out emails. And so we're creating this essentially what I call all-in-one capital raising solution, because what people traditionally have is various applications and things all doing different things. You might be using MailChimp to send out emails. Then you might have a CRM over here doing your CRM stuff. Then you might be using, Google Gmail to send out your emails. And then you got another app if you're texting people. Well, that's expensive. Each one of these apps has a varying cost associated with it. And so what we're going to be doing is rolling out this all-in-one application so that everything is bundled together and synchronized to make your job easier, but also to allow you to become much, much more successful in the capital raising process. And to answer Robin's question about when this is going to be rolled out, we plan to roll this out late next month in February. So definitely stay tuned. And if you want to send us an email, perhaps you can just send an email to my office. And what we're doing is we're actually building a list of people that have expressed interest, so that when it is available, or when we host that initial webinar to introduce it to our community, you can be on that webinar and actually see how this works and get a demo. But it's my belief that this is going to be an absolute game changer. There is another product out there that some of you may have a familiarity with, and this is somewhat similar, albeit it will be very different. And the other product that is somewhat similar is a CRM solution called Go High Level. I don't know if any of you are familiar with Go High Level, but it is a very similar application, and ours is going to be structured along the same lines with some very different things built in, because it will be basically focused strictly to capital raising.
Like that. Like that.
Hey, Brad, this is Edwin. What's the email if we wanted to get on your all's, and Natalie just asked that too, what's the email that we should reach out to be put on that notification?
I'm going to put it right here in the chat. It's just info@bradblazar.com. It's my first and last name. And please see, everybody, there are no E's at all in the spelling of my last name. They're all A's, Blazar. A lot of people try to put an E in there and think that I'm a navy blue sports coat like a Brooks Brothers or a Chevrolet four-wheel drive, but it's Blazar. And if you send an email to that, we'll put you on our list. And, we send out articles. We host webinars every month on various topics of interest. And so by getting on our, what I call Capital School email list, you're going to be made aware of all of our events, all of the opportunities, everything that we go to, that you can come in alongside us. Because I go to these events with family offices, RIAs, professional athletes, and I announce that within our community. And if everybody wants to go alongside me, they're now in the right room. What sets us apart in our platform than a lot of these other gurus or experts is we try to almost guarantee your success by creating proximity to the right audience. If I invite you to come to a family office event, and there are 100 family office delegates and athletes and these RIAs that we're talking about there, you're spending 2 days with these people, breakfast, lunch, cocktails during the VIP networking opportunity. And then on the back end of that, you get the attendee list of all the people that showed up. That's how you build a relationship. It's by being in the same room and getting to know these people over the course of a 2-day event, so that if there is interest, now they know you. You see, when you call their office, you're going to get right through the gatekeeper, because you can say, this is Brad Blazar. I met Edwin 2 days ago at the event, and he asked me to give him a call and follow up. and she'll put you right through. So it's largely attending some of these industry events, not necessarily the Richard Wilson events. That's one of many. But who here has heard of Opal? Anybody here heard of the Opal Family Office conferences? You know, Opal's got their big winter forum coming up in March. So if you want to get with family offices and family office delegates, Opal is a great event. There's another great event called the Jaboy, Jaboy, Elite Family Office and RIA events. And so if you Google Jaboy, there's a big event coming up in March down in Savannah, Georgia that I'll be at. And so by going to all of these events, we're building the relationships with the right audience. And that's what allows us to raise lots of money. Edwin, do you have another comment?
Yeah, actually, Brad, thank you very much. And you actually answered right there some of my one of my question, which was if there are registered investors, and I noticed that both of those are family offices, and I'm sure RIAs are there. Are there RIA specific events to where they're doing a conference or an expo or some type of event where it's registered investment advisors independent registered investment advisors coming together?
Yeah, absolutely. So the one that I just put there is largely RIA focused as well as family offices. There's a big event coming up in Scottsdale, Arizona, later this month in February. It's being put on by one of the large due diligence firms called FactRight. And so they have a big event in Scottsdale. Again, a lot of RIAs. The thing that a lot of us here have to understand is the term family office, unfortunately, has been loosely used by a lot of people in financial services to market themselves. And they say, oh, we're a multifamily office. And they think that by adding the verbiage, we are a multifamily office, will allow them to be more successful than just saying, I'm a financial planner or I'm a wealth manager. But in reality, it's very different than a single family office. Okay, a single family office is like the office of Larry Ellison, the founder of Oracle, or Mark Cuban, right? Where if you go to them and they like your deal, they could easily write you a check in a matter of a week or two for $5 or $10 million. It's one family, one decision, boom, we're done. A multifamily office, which is really an RIA, manages a lot of wealth, but they've got to meet with each family to decide ultimately how each family wants to invest. Now, a lot of RIAs have what we call discretion, which means the family signs a document that gives that person discretion to make decisions on their behalf. And so that RIA may be able to make a decision for many of the families and move forward in a large transaction, but they're very different in the fact that it is not a true family office owned by one family that has created structure around his investment portfolio that handles usually all aspects related to managing that family's business. Like, for example, Mark Cuban, his family office takes care of everything. There's security, meaning security for the family, travel. Whenever they go, they take care of all the airfare, the logistics, obviously the investments, the tax planning. So all of those things are done out of a family office that Mark has set up because he doesn't have the time. And more importantly, he knows that he can outsource that to other people that are going to make sure that his family is very well taken care of.
Great.
Yep.
Now, listen, oh, go ahead, Jim.
Yeah, Daryl, if no one else, I don't see anyone else with their hand raised, and we've got some people that don't attend as often, and I want to make sure that they don't feel bashful about stepping forward and asking a question. So if Robin, I don't know if it's Regan or Reagan. Robin, would you have a question for Brad?
Hi, it's Robin Reagan. No, I'm listening, and I just put in the text, the question that I had, and it was answered. And I'm looking forward to any upcoming opportunities. Nice to meet you. Thank you.
Absolutely,
Fantastic.
you bet.
So, and let's see who else is not on the call. Nagal, would you like to ask Brad a question?
No, I'm listening as well and absorbing the information. It's a really great, great presentation. There's very
Thank you.
informative, and I learned a lot from this. So really great, appreciate that this call.
Great. Well, thank you so much. I truly appreciate it. I want to offer maybe 2 or 3 things just to the community and to the people here that, number one, will obviously help many of you become and ultimately be better capital raisers. One is just, go to Amazon, and if you have any interest at all in really just being a better capital raiser, get my book called Winning at the Capital Game. I break down, all the types of investors. We talk about going through the motions and everything. It'll be the best $20-25 investment you ever made, and it's endorsed by Kevin Harrington on the back, who also, of course, read through it before sharing his endorsement. So that's one thing. It's available on Amazon, as well as my other 2 books. The second is later today, I'm doing a free webinar. And the purpose of this webinar is really to preview what we do in our capital raising boot camps. So I just put the link in the chat. You can click on that if you want to register. It's at 4 o'clock later today, Central Standard. Webinar is absolutely free. We're going to be giving away free giveaways. We're going to be giving away free prizes. We're going to be giving away free tickets to the boot camp. But we do 4 boot camps a year, and you can register for the preview of the boot camp later today and maybe win a free prize, or better yet, win a free ticket to the actual event in Miami. The boot camp in Miami is the 23rd and 24th, which is a Friday, Saturday. And if you go to my website, which is just my first and last name, it's pretty simple. It's just, bradblazar.com. We have a lot of information there, all designed really to help you learn how to become a better capital raiser. We have articles, we have a blog, we have podcasts where I've interviewed, some of the biggest syndicators, some of the biggest people in the industry. And that's where you can also get in direct contact with us, is through our contact page right there. So that, you can learn about our events, really be kept up to speed, and really just learn this process. Raising capital is not as challenging or as difficult as many people believe it is. It really is something that anybody can do with the proper skills and some proper structure. And I say that because I literally have coached thousands of people, and many of the people I would have looked at and just said to myself, man, there's no way, but they do. And like I said before, it's about building the relationships. And so if you can focus on that and build the trust, you can move forward and sometimes overcome many barriers and limiting beliefs and really become a tremendous capital raiser.
So Brad,
Fantastic.
the link that you dropped in there is not working for training.
Oh goodness, let me see here.
So can it be accessed through your website?
No, my link is working that I put in there. Maybe somebody put another link. Oh, Alicia put a link in there maybe before me, but the one that I put in there, oh, you know what? I put it in there for Robin. I need to put it back in there again.
Alicia's
For everybody.
working.
That's the problem is, let me put it back in there.
And everyone, while he's doing that, I want to thank Brad for coming, and I want to thank you all for coming. This was fantastic, Brad. It was truly a pleasure meeting you and everything, and getting you to come here today. It was truly a pleasure.
Absolutely,
So I want to thank
appreciate
you
it so much. Thank you for hosting me, and thank you for having me. I do what I do at this point in my career because I realize the knowledge that I can impart can really transform and change people's lives. We have people that have come to our community that were brand new to raising capital that, today own 50 million, 80 million or more in multifamily or other types of assets, business acquisitions. We got people that are raising money for things like Broadway shows, movie productions. It really runs the gamut. I'd say a good part of our community is largely real estate centric, but you can raise money for many different things. And so we have people in many different sectors and many different industries. So if you're raising money for something that you think may not be a good fit for what we do, absolutely not. We help people launch funds. We can help you put together your pitch decks. We have 10 illustrators as resources to you if you need help putting together things like your pitch decks, your flyers. So do yourself a favor and just reach out and schedule nothing more than just a quick call with me or my team. The call's absolutely free, and you'll be able to figure out very quickly how we can help you get where you want to be.
All right. Well, listen, thank you very much, Brad, for coming. And everyone, listen,
Thank
we'll see
you.
you all back here next Wednesday, 2 o'clock Eastern Standard Time, Capital Raise Strategy Session. And listen, everyone, don't forget, February 6th, come on over to the Commercial Multifamily Mastermind for our underwriting session. We will have a guest speaker. And so I look forward to seeing you there. All right.
Thanks
Thank
so
you all
much,
for
Stu.
coming out.
Thank you, everyone. Make sure
have
and
a
bring a
fantastic
friend with
week.
you.
Thank you.
Thank you.
Okay. And
Thank
bring
you.
a friend. Bring a friend. Thank you, Jim. See y'all later.
Did everyone save their chat?